Hello and welcome everybody to this morning's Daily Market Report brought to you on behalf of CommunityFT for CommunityFT members, in which we will take a look at some major movements to potentially come over the next 24 hours. But at this point, before we do that, let us embrace a quick risk warning. If we can all familiarise ourselves here with the information in front, engage as much as is possible, simply so that hereafter any decisions you make and your trading are of a fully informed nature. Okay, on the cards for us this morning, everyone, let's take a look at some economies, the value of that economy as is reflected by the value of its currency, and let's also take a look then at crude oil. Now we'll switch to the platform to help us with that analysis in some more detail. In front of us, guys, we're looking at the daily chart of US dollar versus Canadian dollar. What we witness here, if we're looking at this from a very long-term perspective, okay, is the gradual weakening of the Canadian dollar coupled with the simultaneous strengthening of the US dollar. And in that overall trend, if you will, or direction of this market, you have, of course, secondary trends. The secondary trends in this particular market seem to be caught by a couple of things, okay? First might be the 55-day exponential moving average and the market's price hitting the same. The second would be the stochastic oscillator. And the stochastic oscillator is more helpful for the even shorter term secondary trends, particularly like this trend just here, which of course then retraced having gone short. So they're the type of things you could look to catch in this market. If you were very sharp about it also, you might even hedge your positions between the long-term indicator, which would be the exponential moving average, and also the oscillator itself. Similarly, let's take a look at crude oil. So quite a nice market to the breakout trader of late, okay? And what we mean by that is crude oil trends very nicely over the last given period of time. Of course, within that though, there have been periods of ranging. So those periods would namely be in this location just here. Now, one key question you might ask, okay, is how would you know not to get into those particular ranging markets, okay? One thing you might be able to use is the commodity channel index, but the commodity channel index signaling perhaps a reversal even at this point was actually incorrect. And we see that the commodity channel index, even at this point, has also been incorrect. So what we would like to look further to, is this particular indicator, which presents a solution to that problem. And that problem is how to identify false breakout patterns or false breakout signals on the crude oil chart. With this particular indicator, which is our own custom-built indicator, you can see the signals as is represented by the arrows. But therein, there's an intellectual or mental filter we apply, whereby if the last trade has been successful, we do not take the next trade. And that would be particularly true in this case here. We would not have entered here, which would have been a false breakout as of now. Similarly, in this position, we would not have entered here. And we might have taken one loss just at this point, only to have been preceded by a massive win and then followed by a massive win, of course resulting in an overall profitable system, which is the ultimate goal of any trading strategy. So we hope this has been of help. If you have any further questions, you know where to get in touch. If not, we'll catch you tomorrow morning. We look forward to the same and have a good day.